Thank you so much for joining us this morning. My name is Daniel Hengeveld, Vice President of Investment Attraction at Toronto Global. We're the region's investment promotion agency. We work with companies all over the world who are thinking about growth, who are thinking about expansion and innovation, and we make that a reality right here in Toronto. As you can imagine, much of the growth that we're seeing right now is in the EV space, with transformational investments from Honda, Stellantis, LG, and local innovators like Geotab. There is an immense amount of momentum in the EV ecosystem. But the road to adoption is still challenging, with an estimated 195,000 charging ports needed by 2030 across our national highway network, hundreds, if not thousands more needed at the retail and residential space. Our collective challenges in pushing the next wave of adoption are real. And so if you're an industry player, if you're a company looking for that growth in the EV space, finding the right funding, accessing the right financing, connecting with the right ecosystem partners is going to be so critical for your success. That's our topic today. We have three experts here from across the ecosystem to help unpack that for us, representing different areas of the federal government, including Export Development Canada, Canada's Infrastructure Bank, and Natural Resources Canada. We're going to get into our conversation in a minute, but first, just a quick note in the format today. We have about 25-30 minutes for what I think is going to be a very engaging discussion. After that, we're going to turn to you, the audience, where we have about 10 minutes for Q&A. So as we go through the conversation today, please write down your questions and have them ready. Okay, with that, I'm going to turn to our panelists and have them introduce themselves and their organization. Glen, can I start with you?
Sure. So good morning, everybody, and thanks for coming to our session. It's always tough to be, I think we're the first plenary, so good job, Daniel, and good luck. But I think, my name is Glen Millard. I'm from Export Development Canada. And for those of you that are not familiar with EDC, we are Canada's export credit agency. So our mandate is to help grow Canada's economy through trade and to drive Canadian exports through providing financial support and risk mitigation solutions to Canadian companies. We work with Canadian companies of all sizes. Of course, as being Canada's export credit agency, we are we are mandated to work with Canadian exporters. But the definition of an exporter is quite broad, and particularly at events like this, that's a critical element to remember, is that to be considered a Canadian exporter, you need to be a member of a global supply chain. So you may be a parts manufacturer, a technology provider that's selling into an automotive supply chain. Well, we all know that Canada's automotive sector is destined for exports. And so while you may predominantly be doing just domestic transactions at this stage, we do consider you an exporter, and therefore you are eligible for all of our support as EDC.
Perfect. What's up?
I don't think is it working?
I think it is now.
Okay, great. Oh, there we go. Good morning, everyone. My name is Melissa Chow, and I'm a director in the investments team at the Canada Infrastructure Bank. And I lead our charging and hydrogen refueling infrastructure initiative. So the Canada Infrastructure Bank is a federal crown corporation and an impact investor with a mandate to invest $35 billion in infrastructure projects across Canada in ways that both attract private capital and that achieve certain outcomes, including the reduction of transportation emissions, which is a cause that I know many of you are passionate about. I'm really excited to be joining the panel today with so many stakeholders in the EV community and looking forward to sharing more about our charging and hydrogen refueling infrastructure program.
Perfect.
Morning, everyone. So my name is Mike Davis, and I'm one of the program managers of the Zero Emission Vehicle Infrastructure Program at Natural Resources Canada. And for those of you who don't know NRCan, we're largely a transfer payment-based program department, and that deals with a lot of de-risking of initial capital investments in nascent technology, largely being those that are decarbonizing, in our case, transportation, but decarbonizing all facets in industries. So I'll be here to speak on behalf of ZEVIP.
Fantastic, and a fantastic group of experts here today. Panel, let's get right into it and let's start talking about some of the funding and the financing programs that your organizations oversee. And I think more importantly, or equally as importantly, who is eligible and what are some of the conditions or outcomes you're looking for as part of those programs? Mike, can I start with you?
Yeah, sure. So just to touch on the ZEVIP program, we de-risk capital investments in EV charging infrastructure. The program has been around since about 2016 in its current iteration. Before that, the department had a lot of focus on R&D in charging infrastructure. And in 2016, our program started to deal with more with commercially ready technologies for EV charging, specifically to deal with or create an EV charging, fast charging network across Canada. So the first iteration of the program was to create 1,000 chargers across Canada, which completed this year, March 31st of 2024. And then in 2019, that's when the program took on a new iteration, which was more to deploy EV charging where people live, work, and play. And so the types of eligible candidates that we have for the program, there's not too many people we actually don't allow for programs. It's basically other federal levels of government. We don't actually, they're not an eligible applicant, nor are individuals. But if you're looking to deploy EV charging in multi-unit residential buildings, for fleets, workplaces, and public places, then we're definitely a place to look into for applying. And yeah, so we've been, our current program runs from 2019 until 2027, and that's the nature of our program.
Fantastic. Melissa?
Thanks, Daniel. So the CIB's Charging Infrastructure Initiative was launched in the fall of 2022. And it was created to support the private sector in accelerating the deployment of large-scale charging infrastructure projects, and in particular, public fast charging infrastructure. So under our program, the CIB provides private sector proponents with flexible and innovative long-term debt financing that is used to cover a portion of the costs of the charging infrastructure. And I've been really proud of the success that we've achieved under our program to date. So far, we've invested nearly $450 million alongside our private sector partners, and which is expected to result in up to 4,000 new public charging ports coming online across the country over the next 4 to 5 years. I'll also say a few words about how the CIB financing process operates, because this is a question I frequently get. So unlike other federal funding programs, like Mike's program, the ZEVIP program, the CIB does not have a formal application process to access our financing. We act very much like a traditional commercial bank or a traditional lender. And we therefore can accept unsolicited proposals for financing from potential proponents. And we work with our proponents in kind of an iterative basis through an investments due diligence, structuring, and negotiation process, which eventually leads to the signing of a financing agreement.
Very cool. Glen?
So EDC, as I think Melissa and I are sitting too close together, but EDC is also a financial crown corporation, just as CIB is. And given we are mandated to help grow Canada's prosperity through trade, we do operate on commercial terms, the same as CIB, in the sense that we do function much like a commercial bank or a commercial insurance company. So how we provide financing, how we provide support to Canadian companies is basically in 3 basic ways. It's through our risk mitigation, which is our trades credit insurance and contract and bonding programs, through our working capital solutions programs, and then through financing, including direct financing as well as equity financing, and then through our knowledge and connections programs. So we've been around. We're actually just celebrating our 80th year in existence this year. And so we learn a lot over that time. So our risk mitigation practice is very much anchored on our experience and growth in these international markets. We operate in 140 plus markets around the world. We have representation in all major markets around the world, and we lean on those for our risk mitigation and our business connections programming. For financing, like I said, we do operate on commercial terms. So much like CIB, we don't really have what would be a normal program intake process. We do work with companies. Our operating model is such, we're not a one and done. We like to think of ourselves as your long-term partner in trade. So we do invest a lot of time upfront to really understand the businesses that we're supporting and to work with them to align the ecosystem to bring the best support that's needed at the time that you need it so that you can grow quickly and to get you active in international markets around the world so we can continue to be a prosperous and successful trading nation.
Yeah, and so 3 different types of funding and financing programs available, 3 different types of application processes. Oftentimes, what we're hearing from people in the EV space is when it comes to access, can they stack? Can they combine? How does that work? Mike, Melissa, maybe I'll go to you on this one. Are you guys collaborating? Are you working together on any initiatives? When it comes to your funding, are people able to stack and combine? How does that work for you guys?
Sure. Maybe I'll start out. So Mike and his great team at NRCan have been collaborating with the CIB very closely since the early days of the development of the CIB's program. NRCan's ZEVIP funding program and the CIB's Charging Infrastructure Initiative really work together in many ways. However, we also differ in terms of the type of financing and funding that we offer, the types of applicants and proponents that we support, as well as the project size that meets our eligibility criteria. So more specifically, the CIB provides debt financing to private sector proponents only that are seeking to deploy charging infrastructure at a large scale. And alternatively, Mike's program, the NRCan ZEVIP program, they focus more on smaller scale projects delivered by both private and public sector proponents. And I'm sure Mike can expand more on that. And I'd also like to say that for all the projects that the CIB provides financing for, all of those proponents are still eligible to receive funding support from NRCan. However, our federal coordination between our entities ensures that NRCan's ZEVIP contribution funding is directed to projects with the greatest need. So the idea here is really to maximize the effectiveness of our federal contributions. And maybe now I'll hand it over to Mike, and he can talk more about some of the other ways in which CIB and NRCan have been collaborating.
Yeah. So yeah, I guess I can start by saying we've been in the space a little bit longer than CIB, and when they were announced as having a shared mandate on EV charging, that's where we kind of started to collaborate a little bit more on what our knowledge and subject matter expertise brings to the table. And at that time, we got to learn a lot about how CIB operated, and based on that, we kind of created more of a bit of a triaging effort in terms of we realized that NRCan, the ZEVIP program, has terms and conditions that limit us to $10 million $10 million worth of investment towards any given project, and that's kind of, I believe, the CIB lowered their floor effectively for EV charging so that we could kind of make sure that there's no gaps for project sizes. Another difference, I guess, is that we do focus on smaller scale projects, and we try to get that down to the smallest level in the sense that we do have delivery organizations as well that focus on very small projects to the tune of less than $100,000 worth of investment or less than 20 level 2 chargers. So we have had about 30 of those in the past. I believe a lot of those are maximized in terms of how many. I don't know how many are receiving applications anymore, but those are some of the main reasons. Just terms and conditions, terms of repayment are different. We have some repayable contributions, some non-repayable, depending on the type of project or entity you're actually going to be operating and the actual project size itself. And so, yeah, we haven't actually had any projects that have been cost shared to date, but we do have we have stacking assistance, but stacking limitations as well. So that's where we interact with CIB on a regular basis to make sure that we're aware of the latest opportunities where there could be cost sharing opportunities, but we haven't had any interactions yet.
Fantastic. And I think we could probably spend almost an entire morning talking about the nuances and the types and how the funding works. But I do want to switch gears for a second. In my opening, I talked about some of the challenges that the industry is going to be facing. I'm wondering for the panel how your funding programs help enable or close some of the gaps in the market when it comes to reliability, when it comes to access, when it comes to reach into underserved communities. Glen, I think maybe I'll start with you.
So, part of our mandate as an ECA is to be a gap filler in terms of what the Canadian financial institutions or the ecosystem is providing. So a lot of the programs that we deliver are in partnership with the Canadian financial institutions, and we're really there to be, like I said, that long-term. I think we're cut. Can you hear me now? Yeah. So we are there to be that long-term partner for you, the Canadian exporter. And so in terms of closing some of that gap, I mean, they're going to talk about a different gap, but we're really there to fill that gap around accessibility, so that access to financing, particularly for growth stage companies, to make sure that we're there to complement what's available in the market. So your previous questions about how do the we work with other entities. I mean, we'll partner with anybody, to be quite honest. And for a lot of our solutions, about half of the work we do, we operate under what we call a partnership preferred philosophy. And so we do like to work with other partners to make sure that we are adding that extra capacity to get the companies what they truly need to continue to grow and fill the market need that they're working towards.
Sure, I think this is a really great question because as all of us know, widespread availability of charging infrastructure as well as reliability of that charging infrastructure are really big concerns for EV drivers today and represent some of the greatest barriers to EV adoption, which we're all working towards together. So the CIB's program was designed and developed to really address these issues head on. Our program aims to reduce geographic coverage gaps across our country's charging network by providing more CIB financing, up to 80% of capital costs, for chargers that are deployed in underserved areas or remote communities. And the idea here is really to improve and provide more equitable access to charging for EV drivers across Canada. And on the second point related to charger reliability, our program includes incentives to encourage our borrowers and proponents to enhance the reliability of their charging networks. And we do that through an uptime standard of 97%. So our borrowers under our loans are required to report on the uptime performance of their networks quarterly over the life of the loan. And failure to meet that standard does have consequences in terms of their repayment obligations, as well as the interest rates on the loan. So we think that this is a really innovative way to address some of the issues in the market today.
Yeah.
So from NRCan's perspective, we recently underwent an audit performed by the Commissioner of the Environmental Sustainable Development. And what it came home with, the program was, I guess, received relatively decent praise for how the way the program operates, but it did provide a couple suggestions surrounding the points that you had mentioned. One being how to kind of monitor and evaluate and encourage better reliability standards for EV charging that we're deploying. And so a couple of ways that we're trying to tender that with our future RFPs, a bit of a pilot for this time is on, we're now allowing prepaid expenses as part of our program's parameters, which is something we weren't able to do before, but we've received permission approval to do so, which I think is something that stakeholders often encourage, is that prepaid expenses would likely go a long way to providing better reliability. And the next point is that we always require proponents to provide a final report in relation to the projects once they're completed. And we like to make sure that the actual station is operational. But going forward, we're actually going to require those for public charging and fast chargers to demonstrate publicly or publicly disclose the fact or what their uptime criteria is for up to 6 months after project completion, just to as a way to kind of fact find what uptime is looking like for chargers in general, but chargers specifically tied to our program. And to the second point, in the audit anyways, it mentioned that we could do a better job in terms of being strategic where we choose to deploy charging. So identifying, first defining underserved areas, but also maybe choosing or prioritizing areas where those underserved areas are actually being defined. So for this next RFP, we have a gap map or a planning tool that we've established to use alongside the RFP that we'll use to have applicants better decide or better determine where we think there are needs in either rural, remote areas, or whether it be in gaps where the distance between chargers is too great for what the standards currently are. And so that will be part of our evaluation process for the next RFP, is using a map to kind of guide where we think applicants should be going and where we'd like to choose the decisions for the final process.
Great. The word innovation, I think, has come up a couple times now in our conversation. So I'd love for the panel to tell us a little bit more about how their funding programs are evolving, what they see on the horizon, and then maybe also talk a little bit about where technology plays into that and how some of these programs might be aligning to what we're seeing on the horizon when it comes to new tech. Mike, can I go back to you to start this one?
Sure. So like I said, NRCan has a long history of working in EV charging. Dating back prior to when EV charging was commercially ready. One of our sister branches within the department, the Office of Energy Research and Development, they've been doing a lot of, they developed quite the subject matter expertise that we've tapped into quite a bit. And so basically within every RFP that the program has, we've had over 10 now within the program. we often see things are kind of pushing the envelope in terms of how nascent the technology is, and it may not actually fit the mold of our RFP at that given time, but we always take a litmus test on the number of applications we get with certain new technologies, and we tend to evaluate those technologies with our subject matter experts on where they're kind of seeing new technologies, the ones that they would encourage us to accept as part of future RFPs. So I think within each RFP that we've had, we have evolved what we accept as commonly or ready technologies each and every time. So that kind of brings us to where we are now, where each year we revisit the RFPs, and then we mold the future RFPs towards where the market is going.
Sure. So the CIB's program was originally designed to support owners and operators delivering charging infrastructure through kind of a traditional network model, similar to gas stations. And our initial investments with Parkland and Flow were really great examples of this approach. As we kind of move into the next stage of our financing program, we're seeing different approaches to delivering charging infrastructure, which are really interesting. Firstly, we're seeing different technologies like Mike touched on as well. We've seen proponents come to us with charging technologies that integrate energy storage or battery storage into their charging technology in an effort to alleviate some of the grid constraints that everyone's facing. We're also seeing innovations and different commercial models for delivering charging infrastructure that kind of try to address the challenging economics related to fast charging infrastructure. For example, some proponents are leveraging other revenue streams, such as advertising, for example, to enhance the profitability of their networks. And I think a lot of this innovation is really exciting to see. And I think the other trend that I'd comment on is an increasing interest in deploying fast charging networks to serve fleets or medium and heavy duty vehicles. As we all know, electrification of fleets is in its relative infancy in comparison to electrification of passenger vehicles. But this is an area that we really expect to grow over the next decade, both having more electrification of fleets and growing needs for charging infrastructure to serve those fleets. And the CIB has already been working with many stakeholders in the fleet charging community to look at ways that we can expand our financing program to support these developments.
Fantastic. Glen?
So, Daniel, for EDC, as I stated earlier, our goal is to be that long-term partner in trade, that partner that you can depend upon as you do grow and into new markets around the world and take what Canada has to the other markets. And so the way we've designed our programming is going to look like there's not a lot of innovation, because we really do offer our solutions through three key buckets of delivery, one being our risk mitigation solutions, our working capital solutions, and our growth capital solutions. But those three core product streams or program streams are designed in such a way that, because we are industry agnostic, we work with all Canadian exporters, and being that long-term partner, we like to invest the time to really understand our clients. So within those three service delivery streams, we're able to adapt and to provide what's needed based on the sector the company is operating in, the markets that they're going to, and the risk affiliated to those markets that exporters are selling to. So if you're to look at any of EDC's offerings or our website, or you're not going to see a lot of new innovation, but our programs are designed to be adaptable so that we can apply them in the way that each sector or segment of the economy needs them.
Thanks, Glenn. And I think trying to appreciate the challenge of keeping pace with the rate of technological change right now and making sure they're incorporated into all the different financing and funding programs isn't lost on myself or the audience. Melissa, I want to go back to you. You talked about fast charging infrastructure. Maybe for us and for the audience, you can pack a little bit more about how the infrastructure bank is focusing on it, how you're de-risking it, and how you're trying to incentivize growth in that space.
Sure. So today there are actually few examples of profitable, large-scale fast charging infrastructure networks. And the reason for that is due to various factors, including the higher capital costs of deploying fast charging infrastructure as compared to lower power chargers, And more importantly, like the significant uncertainty surrounding the rate and the pace of EV adoption and therefore charger utilization. So the CIB's program, we aim to incentivize and to de-risk investment in fast charging infrastructure by sharing in some of the risks related to uncertainty in EV adoption and charger utilization, which have traditionally been significant barriers to private sector investment in this space. So you may be wondering, how do we do that? And we do that by aligning repayment of our loans with actual utilization of the charging network over the life of the charging assets. So I'll give you an example of how this works. If charging network's actual utilization is below expectations, then our borrowers' repayment obligations would be reduced, and that's how we share in some of that risk. And conversely, if a charging network's actual utilization is exceeding expectations and therefore the charging network is really successful, the CIB will then share in some of that upside through higher interest rates. So we think it's a really innovative and kind of new approach to sharing risk with the private sector and helping to de-risk investment in this space.
Yeah, and the sharing of risk, I think, as the EV space gets its footing and continues to grow, is so critical for success. Glen, maybe I'll go back to you. Off the bat, you talked about the importance of exporting. We're an exporting nation. For companies in this space who are thinking about growth, who are thinking about taking their products or their services abroad, how does EDC help?
Yeah, so like I said, we have our three core solutions. We have risk mitigation, we have working capital, we have growth capital. Those solutions can take various forms. We do everything from your basic credit insurance to supporting performance bonds to help you win international contracts to actually taking equity positions in companies that we see have great potential and growth opportunities. And so we really do have few limits on the types of supports we can provide. For those companies that are looking to work with us, I can't stress enough the importance of speaking to us early. And while you may be, operating domestically with the programs of my fellow panelists here, every piece of technology, every piece of expertise we develop, that is all marketable to the world. And, the world wants what we have. And, I in our pre-conversations, hearing about the challenge with the charging infrastructure, getting to underserved communities and to making sure that it's accessible across the country, we see that as an enormous opportunity. If we learn to do that really well domestically, if you think of Canada, we have big urban centers, we have small rural communities. They all have to be connected. Some are in warmer climates, some are in cold climates. That really makes what you're building in terms of a charging infrastructure attractive to the rest of the world. And that's really where we see a big opportunity and where we want to learn and invest the time to understand your companies, what you're doing, so that we can help take that expertise out to the rest of the world.
Awesome. A note for the audience, we are going to head into the Q&A session shortly. We've got about 15 minutes left, so I believe there's a mic at the back. If you have questions, you can start to sort of line up there and think about that. I'm going to turn back to the panel and sort of cap off our conversation and ask each panelist, what final piece of advice do you have for the audience, for people who might be thinking of applying to your funding programs or partnering with you? Mike, maybe I'll start at the end with you.
Yeah. So this is a timely question because we do have an RFP coming up in the next month or so. And so one thing I would definitely stress is it's a very competitive program. We anticipate this to be our most competitive request for proposals yet. So in doing so, one thing I would stress is that when you're fulfilling your applications, make sure to don't spare any details about your projects, and make sure to plan thoroughly with your projects too, and demonstrate that in writing more is always better than writing less, because we might see the bones or skeleton of a good project when we're reviewing an application, but if it's not thoroughly demonstrated through words, then we can't award projects success when in a very competitive process. So things that I'd recommend is securing access to site is one that we often run into. Make sure that you have that clearly laid out for you in your project's early stages. Secure the right permits that you need, or demonstrate that you are in the process of doing so. Identify your collaborators at an early stage and often, and engage with them regularly, and definitely get in touch with your equipment providers. Just whenever you're seeking to, if your project requires transformer upgrades or Because we still hear a lot that there are supply chain issues. So if we get to the point where we like a project and we want to move forward with a project, we still have certain time limits as to when we can actually move forward with those projects. So definitely be in touch with people on a regular basis. Let them know you have a project and get realistic timelines from them. So those would be the main things: just planning and engage with your collaborators and let us know in your applications.
Perfect. Melissa.
In terms of advice I would give to anyone seeking financing under the CIB's program, I would return to the CIB's mandate, and that is to accelerate and catalyze private sector investment in fast charging infrastructure to accelerate the adoption of EVs. So if you keep that in mind, I think that'll serve you well. So what that means is I would encourage potential proponents and applicants to show us what your most ambitious deployment in the next 4 to 5 years could be, to tell us how you plan to raise private capital to invest in the project alongside our CIB funding, and to really demonstrate your readiness and your capacity to be able to deploy fast charging infrastructure at scale in order to achieve our mandate, because those are really the key criteria we look at when evaluating investments.
Fantastic. Glen?
So my advice would be dream big. I mean, the opportunity that presents this industry in particular is enormous, and the ecosystem that's here to support you is very large. I mean, we're just a small sampling of what's available to support companies at the forefront of these emerging economies. And, dream big, because that's your job as the entrepreneurs and the founders, and it's our job to make sure you have the supports behind you to be successful. And we're 3 very good examples of those supports that are there. So dream big, talk to us early, get the ecosystem involved. If we can't find the solution for you, I now know Melissa, and I know that what I can go to Melissa for. So it's your job's to be dreamers and do what you do best, and let us do what we do best.
Fantastic. Okay, we've got some time on the clock for questions from you, the audience. So please, we have a mic at the back. If you want to line up or step up there, we can turn to our experts and have them answer some questions.
Thank you so much for all the panel members for providing great insight into funding and financing. My question is very small. As Melissa mentioned, you are mainly focused on large-scale infrastructure projects. Is there a cutoff criteria in terms of number of connectors or dollar value for which you will be more interested to go for financing?
I think the question, if I heard correctly, was whether we have like a minimum investment threshold and whether we have like a minimum number of chargers that we need to.
For CIB to go forward with financing, because what we have seen in the market is mostly 5 to 10 connectors, 4 or 2 EVS, level 3 EVSEs. This is the most typical model we have seen. So it would be interesting to know how CIB will be looking at as a large scale infrastructure, or would it be also looking at those skills as well to finance and go forward with it?
Yeah, so when I said large scale, what I mean by that is a network of chargers at multiple locations rather than, a single project at a single site. I think I mentioned earlier, our mandate is to invest $35 billion across Canada in infrastructure generally, and specifically with respect to our investments in the green infrastructure sector, we have a mandate to invest $10 billion. So that's a huge number. And what that means is that in order to reach those targets, we have to take big swings in the market. So we do have a preference, and we look for larger scale investments in the $50 to $100 million range, ideally. However, we have the ability to look at smaller investments because we're trying to ensure that there's no gap in funding as between NRCan's program as well as the CIB's program. And for smaller projects, it is helpful where the project has an element of that touches on one of our other our other priority sectors, such as Indigenous equity, for example. Then we can kind of look at a smaller scale project. We look in terms of the number of chargers, and that was the second part of your question. We really look at 2 outcomes. I mentioned that we're an impact investor and we're seeking outcomes rather than returns. So the two outcomes that we look at are number of chargers deployed, because we have a joint federal target to add 50,000 new chargers over the next several years, as well as GHG reductions. So for the number of chargers, we don't have a specific requirement, but of course, we look at the number of chargers relative to our investment dollars, and given some of the numbers I provided around our minimum investment thresholds, that usually results in quite a large number, in the thousands potentially, or at least hundreds of chargers. I hope that answers your question.
Yeah, certainly I can see the gap now in terms of your threshold and how ZEVIP is supporting per connector basis based on level 2 or level 3 capacities. I guess if any new person wants to start a new company and start up as in spreading out eventually as a large network, but at the starting point they start with this group of model like certain level 2 and level 3 at particular site and replicate that model. Once it's successful, I guess there might be a gap in that financing portion of the business for new organizations come to the market and provide these services.
And I do see we have a number of people looking to ask questions. So what I might do, sir, is ask that we connect after and take that one offline. So.
Great presentation, panel. Melissa, I had a question for you. You brought up the concept of risk sharing, which is really curious. It's a great concept. And you mentioned the ability to lower customers' payments and or increase payments and share an interest rate depending upon the usage of the charging stations. Just had a quick question for you. Do you have a minimum facility type? Do you have a minimum floor payment that the customer has to make throughout the term? And are you doing quarterly or annual adjustments to adjust the payments accordingly?
Yeah, so we to tackle your last question first, we look at our payments on. We have quarterly scheduled amortization payments under our loan. So we look at that quarterly, but we assess the utilization over the last 12 months, given the seasonality effects that happen. I think the other part of your question was, can you remind me actually how?
Does the customer have to make at least a minimum payment regardless of the utilization? And how large does the overall client's facility have to be to support this type of program?
Yeah, so typically, like I said, we look at $50 to $100 million investments. So that would be our facility size. There is no minimum repayment. So we develop a scheduled amortization profile over the term of the loan. And we measure utilization relative to a forecast. And we adjust the actual payment that the borrower has to pay based on that scheduled amortization payment. In a very unrealistic scenario where utilization is zero, yeah, our borrower would not have to pay anything. Obviously, that's an unusual situation. And to the extent that there is like remaining principal at the end of the loan term, that is forgiven. So it truly is a risk sharing in a real sense.
Thanks very much. That's awesome.
Great question.
Hey there. I have a couple questions, if that's okay. So initially, you guys talked a lot about EV charging and infrastructure related to that. But in terms of overall EV infrastructure, such as mechanic shops or any sort of infrastructure that might be working with EV, is there any sorts of investments you guys look towards that? If, for say, it includes EV charging as well. Anyone, pretty much.
I guess for starters, we don't unfortunately have any investments towards that, the industry supporting or the technicians or mechanic type jobs, but we do have I guess we're currently kind of exploring or being reached out to from a number of industries that speak to their training that they do provide for EV charging infrastructure deployment and installation. So we're kind of, I guess, maybe in a fact find or learning phase where we're trying to see the number of where groups are kind of coming to us to explain what their actual training courses are, and we're also trying to find out whether there were things that we would consider as part of our program parameters. So it's still, I'd say, an early fact finding stage for us.
Did that answer your question?
Partly. Mainly my question was in case of EV car infrastructure, let's just say garages that might be working on EV cars or something like that, which we're from Alberta. I'm from a company from Alberta. We really find that there. So would you guys be interested in investments in that side?
If I understood correctly, like you were asking if we also provide investments in like manufacturing of vehicles.
Or any sorts of EV stuff?
Uh, I'll speak for the Canada Infrastructure Bank. We're an infrastructure bank, so our mandate is only to invest in infrastructure. We don't really consider vehicles part of infrastructure, so our program is specific to just the charging infrastructure.
Yeah. Great. And I think that question is probably one we can also take offline too. I see there's a long lineup behind you. We've only got 5 minutes, so I will come find you after. Okay.
I'm too short. I need it lower. A great presentation panel. Maybe this is a question for Mike. As a public sector, like municipality, you are supporting this program, but is there any future plan for replacing or upgrade for the EV charger?
So are you asking if there's future plans for the program to be?
For replacement, because time to come is very soon for replacement.
Okay.
We have already done that maybe 10 years or 11 years. Is there any future plan for supporting replacement or upgrade?
I'd say it's something that's come to the forefront in conversations in, let's say, program design. It's something that our program currently doesn't allow because we have Treasury Board Secretariat sanctioned terms and conditions. But I'd say annually it's something that's revisited if the program is ever like recapitalized, and then it does. We always revisit, redesign. So it's something that would definitely be discussed and be considered. Like right now, it's not part of our parameters, but like you said, it's in that 10 to 11-year window, it is something to reconsider about either upgrading or replacing. So it's something that would be it would be explored for our next budget proposal for sure.
Great question. Thank you. And I think we have time for one more. So,
Good morning, panel. Great presentation. Maybe I'm wrongfully interpreting that a lot of the infrastructure talk that you are saying more pertain to hardware, getting the chargers built. I think maybe I'm wrong. But my question here is that what is the vision towards innovation or investing in software that actually powers the hardware? Are you looking at that also as part of the movement for infrastructure development, innovations in software development?
I would say from our standpoint anyways, it's something that would probably be more in the, like our program has very strict indicators and that it is about deployment of charging infrastructure. So unfortunately we're specific to the hardware. And we do have other groups that say, like I mentioned, the Office of Energy Research and Development. It might be something that would be better fitted for other transfer payment programs within NRCan or other departments. So for us specifically, we don't have a focus on software at this time, but like I said, it's something that could be considered if it is something that's seen as a need, then we would potentially explore for future program design efforts.
And likewise, for the CAB, we have a similar position. We provide funding for hardware, installation costs, site preparation, and upgrade costs related to the deployment of charging infrastructure. But to the extent that software solutions or software development is an integral part of deploying the infrastructure and could not otherwise, and the infrastructure could not otherwise be deployed without that, we would consider including that within the eligible project costs that we would finance.
Yeah, so for us, technology, we love technology companies just by the nature and virtue of what a technology company produces, i.e. software. It's very exportable, it's very attractive. We're very interested in technology companies and the new software that's being developed as a result of the work being done here. So for sure, connect with us.
Fantastic. An absolutely great question. Audience, thank you. As you think about your funding and your financing needs, you have 3 great partners here across the federal government on stage. Thank you very much for your time today. Let's have a round of applause for our panelists.